I'm here with another video, and today's going to be another market analysis. It'll be the last of the week because today's Friday and the financial week ends on Friday. So Saturdays and Sundays will probably be cryptocurrency. I'm still trying to figure out how to implement cryptocurrency analysis into a YouTube video, but once I do, I'll get it out straight away. Probably today I'll be planning focusing on how to create videos on new cryptocurrency because I'm still trying to learn how cryptocurrency works myself. But as of now, Mondays to Fridays will be stocks. Maybe Saturdays and Sundays I'll still be doing stocks, but out of market analysis. Anyway, I'm going to continue with this video. Today's market analysis will be somewhat different. I want to implement a review of my performance. I know usually show you guys what the process I use to choose stocks, but I also want to show you the results because there's no point me showing you the process I use and not showing you the results to show whether or not they actually work. But even if I show you that that they work in the short term, they might not necessarily work in the long term. So I'll probably implement some form of long term analysis as well, and so you guys can get an idea, and so you guys can actually decide for yourself whether or not you want to implement the strategies I use or not. So anyway, without further ado, let's get into it. Um, there are going to be some losers, but I'm going to show you some of the winners. So some of the stocks I've chosen based on the strategies I use. The main strategy, if you guys haven't watched my videos, if this is the first video you've watched of mine, main strategies I use is I look at the top losers. Sometimes I look at the top winners as well, but I mainly choose from the top losers. I look at the top losers. Actually, let's do that first. Let's look at the top losers and then look at the top winners, and then I'll show you. This is basically the strategy I used, and then after we finish looking at the top winners and losers, I can show you the past losers and past winners I've chosen as good stocks, and I'll show you the performance that they've how they performed. So what we're looking for is we're looking for market caps over $1 billion. That's our deal anyway. If we don't manage to find them, we'll probably choose something a little bit under, but not too low because then the risk starts to get too high. So I'm just gonna quickly look. That one doesn't show any market cap, so we're gonna skip. 32 francs. So as I said, $1 billion and over kind of allows us to choose stocks that have kind of gone through a lot of the barriers that small companies go through. Small companies are, in my opinion, too risky because they have too many competitors. Every company has at least one competitor, but small companies have too many competitors that can easily take them over, easily defeat them, and easily put them out of business. So that's why I try to avoid small companies. Some of the companies that are on the stock market are shocking. I'm surprised they even made it there because their market caps are just so tiny. I'm just surprised they even made it onto the stock exchange. So this one's 113 million, which is way too low as well. It's the highest of all of them, but it's still way too low. But we're just gonna quickly check the financials. So I'm gonna immediately list a red flag. So the profit margin for the past 3 financial years, besides the current, is negative or negative. So I'm immediately gonna skip this one because if a company is making negative profit, then this is not necessarily a company you're gonna want to be invested in. So let's get into the top winners. We usually kind of go through the top winners very fast because if the company's stock price has gone up, we usually want to see why it's gone up, but we also want to see whether or not the company's value is the market cap. In other words, the price that it's selling for is lower than its or close to its intrinsic value. So without discounting the future cash flows. So if you guys are kind of confused about the terms I'm using, or maybe I'm speaking too fast, please put in the comments the specific words that you might not understand, and I will be, because I'm just gonna start creating YouTube videos tailored to specific financial terms, just so I can. It's not only just so I can create videos for you guys to help you guys, but it's also to help me, because the more I study and the more I expose myself to these words, the more I implement financial terms, the more I actually understand them. So yeah, let's go into the top winners. So NFL Biosciences. So far none of these are actually show market caps. And this is also, anyway, let me skip that point. Adolfo Gensight. So none of these stocks are showing any market caps. It's just strange. Do you know why? I think I know why. Because the top losers and top gainers are usually the most volatile stocks, and the most volatile stocks are the most riskiest stocks. The most risky stocks, and well, that's what volatility is. Beta. If you ever see beta on a financial statement, on the if you ever see the term beta, which is over where is it? Beta. If you ever see the term beta, beta just simply means the risk level of the stock. How much it fluctuates compared to the average fluctuations of an average stock. So how much it fluctuates compared to the average fluctuations of the entire market. So if a beta is below 1, then that means the risk level is about the same. Basically exactly the same as the riskiness of the entire market. So you'll get the same returns probably as if you invested in a broad market index fund. But if the beta is above, then it's of higher risk. If it's lower, then it's of lower risk. So, and usually the stocks that are most risky are the smaller cap stocks. That's why we don't see any financial information here. Small cap stocks don't have a large enough team to dedicate to releasing financial information, or at least in-depth financial information, and they don't do it on time either, most of them. So we're going to get into the last stock. So let's go on to the last one, which is SGC, and yep, none of them. This one has 74 million market cap, but that's not what we want. So far we found nothing. But then again, you have to realize that the time of the day we're doing this is very, very early. But let's get straight into the other aspects of the video. So this is the part of the video that I don't usually do, but I've decided to do it because I was actually checking the stocks and performance. I was wondering, is my strategy actually working? Because this is the first time I've actually properly checked, and based on an analytical approach, like ask myself the question: how are my stocks actually performing? If I'm using this strategy, how are my stocks actually performing? And I need to check. So let me quickly check my pie. So so I've labeled some of my portfolios quite strangely because I don't really put too much attention to detail on the names of the stock. So this is one of the portfolios I made. Sometimes I'll just make general portfolios. So as you can see, the portfolio value is £157.88, and I invested £99. So the portfolio value has increased by 58%. That's quite amazing, actually. Some people expect to make 10% a year, so 58%. I know it's a small amount of capital, but and also look at the date on which I invested these stocks. Invested in these stocks, so which is the 10th. So that's about 13 days ago. No, sorry, that's about 24 days ago. So 24 days ago, just under a month, I've made 58% return. So, and I don't have to pay any tax on it either because it's an stocks and shares ISA. So let's look at the holdings. Let's look at the two. There's only 2 stocks in here. So the bulk majority of the value has come from one stock, which is called Upstart Holdings, the other Future Fuel. So we're going to quickly check these stocks. We're going to only check Upstart because that's the one that's made the most value. So Upstart Holdings has gone down by 67% it actually went down by more, but because today it went down by 12%. So 12% plus 67 is 79%. So 79% of its value had been wiped out throughout the year, and they still had a roughly £5 billion market cap. So if 79% of its value, that's over half, had been wiped out, that means its market cap was about 10 billion at the start of the year, and now it's 4.27. So let's quickly look at the financials. So 16.9% profit margin, awesome. Consistent debt to asset ratio, which is just around 50%, and the net change in cash positive, almost $1 billion, positive, fifth of $1 billion, and negative, but the negative is very small. The negative can be overtaken by the net change in cash of the preceding year, so of the next year, the following year, and if you calculate that's about $1 billion in net change in cash, in 3 financial years, considering that the company's market cap is only 4.27 billion. That's about 25% net changing of the company's assets that have been added. It's grown by 25% in only 3 years. That's awesome. So I've invested in this company simply because the company is good. It's just excluding the way it makes money, but that's also something you need to take into consideration. The company is good in terms of financial strength, and it's decreased massively for whatever reason. I've decided to invest in it simply because the company is good. It's got a good financial track record, and it just happened to have a bad day or a bad year. So that's why I've invested it for the long term. It seems that I didn't have to wait too long, but we don't know in the future. So anyway, let's look into more of the stocks. So this one's another one down large. I don't think this one's done too well, but let's check the individual stocks here. This one hasn't done too well. Um, all of these are I've used the same approach, but these ones haven't done too well. They haven't done massively bad, but they have done too well either. So down large. So KKK is another one. Let's just check. I put 299 and I've gained 29. So Tesla not done too well. Palantir and Rivian Motors. So Rivian 35% and Palantir 23. So I remember investing in those companies simply because the value had gone down by so much. I think Ultimate Portfolio and Net are the only others. So let's just quickly check Ultimate Portfolio. I've done this one 2 days ago. So let's quickly check. Amazon 3.5%, Tesla 1.3, Alphabet 2. So actually this isn't actually the same approach. This is not the same approach. This portfolio is supposed to specifically be made for this is kind of like this is the benchmark of all of the future investing I do, because I've decided that experimentation with just general experimentation in financial assets is not the best idea for someone with a small amount of capital. For example, I'm not a millionaire yet, but I feel that risking so much of my capital and my income, especially at my young age, is not the best idea. Simply because if I lose all of it, then you can screw your life up. So I've decided that the best idea is to put most of my money into large cap stocks that have big brands, are well known in the industry, top of the industry, don't really have any competitors, um, any threats. So yeah, they're more likely to survive long term. So yeah, that's probably the best, and they have the best consistent earnings growth. So yeah, without further ado, I'll see you guys in the next one. Thank you for watching.